The tax and wealth hacks your CPA is not telling you. Real quick, before we dive in, and I say this because I actually care about you. Everything I share on this show is for educational purposes only. I'm not your financial advisor, even though I have helped tens of thousands of people become wealthier and wiser. I'm not your attorney or your CPA. These are strategies I learned, researched, and in many cases used personally. But your situation is unique. Before you make any financial moves, please work with a qualified professional who knows your specific numbers. The goal of this show is to make sure you walk into that conversation already knowing the right questions to ask, because an informed client always get better results. Now, let's get into it. Let me ask you something. You worked hard this year, maybe your best year yet. Revenue is up, business is growing. You are doing the thing. And then tax season hits and you hand over a check to the IRS that makes you want to throw up. Here's what I want you to understand today. That check, you didn't have to write it that big. And nobody told you that. Not your CPA, not your financial advisor, not your banker. Why? Because most of them don't know these strategies. And the ones who do, they charge $500 to $1,000 an hour to share them. Today, you get them for free. I'm Carlos Cicada. And in the next 10 minutes, I'm going to give you the exact tax and wealth strategies that the wealthy use to keep more of what they earn legally while you build a business that doesn't just make money, it keeps it. Let's go. Strategy one, the S Corp switch. If you are a business owner and you are still operating as a sole proprietor or a single member LLC taxed as a disregarded entity, you are overpaying self employment taxes. Period. Here's a fix: elect S Corp status. As an S Corp, you pay yourself a reasonable salary, let's say $60,000. You only pay self employment tax on that salary. The rest of your profit flows to you as distribution. No self employment tax on that. None. On $200,000 of net income, that move alone can save you $15,000 to $25,000 a year. Every single year. Go talk to a CPA who knows S Corps. Not all of them do. Ask specifically, should I be taxed as an S Corp? They don't get excited. Find a new CPA. Strategy 2, the Augusta Rule. This one is wild. It's called the Augusta Rule. Section 280 of the tax code. Here's how it works. You can rent your personal home to your business for up to 14 days a year, and that income is completely tax free to you personally. Your business deducted as a legitimate business expense. You receive it personally tax free. No reporting required on your personal return. Think about that. If you charge your business $3,000 per day for 14 days, that's $42,000 in tax free income and a $42,000 business deduction. Both sides win. The IRS can't touch it. Just document it correctly. Have a fair market rate. Keep records. Done. Strategy 3, your kids on payroll. Do you have children? Put them to work. I'm not joking. If your child is under 18 and you operate as a sole proprietorship, or a husband-wife partnership. You can pay your kids up to $14,600 this year, completely tax-free to them. Zero federal income tax, zero Social Security, zero Medicare. And it's a full deduction for your business. They can answer emails, create content, model for your products, file documents, real work, real pay, real deduction. And here's the bonus: take that money and put into a Roth IRA for them. Now you are building generational wealth and cutting your tax bill at the same time. Strategy 4: the backdoor Roth. You heard of Roth IRA, tax free growth, tax free withdrawals in retirement. It's incredible. But you make too much money to contribute directly. Most high earning businesses owners, they hit that wall. Here's the back door: contribute to a traditional non deductible IRA. Anyone can do this. And then immediately convert into a Roth, legal IRS approved, been around for years. You are funding a Roth IRA even at $500,000 in income. Your money grows tax-free forever. Your heirs inherit tax-free. Most people never knew this door existed. Now you do. Before I get into the next strategy, and this one is probably the most powerful thing I will share today, I have to mention something. A lot of what I'm teaching you right now, this is exactly what you do inside disruptorscode.com, a company I own. We built it specifically for entrepreneurs and business owners who are finally making real money and don't want to lose it to bad markets, bad planning, or a government that keeps moving the goalposts. At disruptorscode.com, we help you protect your wealth from market manipulation using tax-free growth strategies. We show you how to set up wills, trusts, and the right insurance structures so that what you build actually transfers to your family tax-free the way you intended. Because here's the truth: making money is only half of the game. Keeping it and passing it on, that's the whole game. Links in the show notes. Disruptorscode.com. We grew our social media to over 100,000 followers over the past 15 years, teaching those elements, teaching you the stuff that no one will teach you because they're out there wanting to charge people $500 to $1,000 an hour to share what the top 1% really do with their money. Back to the strategy that's going to change how you think about your retirement money forever. Strategy 5: max funded IUL, the account Wall Street hates. Now I wanted to talk to you about something that changed everything for me personally when I learned about it. It's called the Max Funded Index Universal Life Policy, an IUL. Here's what it is in plain English. It's a life insurance policy that you overfund on purpose, not for the death benefit, but for the cash value account inside of it. That cash value is linked to a market index like the S&P 500. When the market goes up, you participate in the gains. When the market crashes, and it will crash again, your floor is zero. You lose nothing, zip, nada. If the S&P drops 40%, like it did in 2008, your account doesn't drop. You just don't grow that year, but you don't lose a dime. Now, here's the part that makes it extraordinary for business owners. When you need to access that money in retirement or right now, you don't withdraw it. You take a policy loan, and loans are not taxable income. Tax-free growth, tax-free access, protected from market crashes, and a death benefit for your family. The wealthy's been doing this for a very long time. Your 401k cannot do any of that. Strategy 6, 401k to a fixed index annuity. If you are within 10 years of retirement and you have money sitting in a 401k exposed to the stock market, we need to talk. You cannot afford a 2008. If you lost 40% of your portfolio at 58 years old, you don't have time to recover. That's not a strategy, that's gambling with your future. A fixed index annuity or a FIA gives you the same market linked upside with 100% principal guarantee. The floor is zero. You never lose your principal ever. And here's something most people don't know. Certain products in certain states offer a 10% premium bonus the moment you move your money in. Day one. Your 300,000 becomes 330,000 guarantee. Your 500,000 becomes $550,000 day one guarantee. You are not losing sleep over the next crash, the next war, the next whatever. Your money is protected and it still grows. Strategy 7, real estate exit without the tax headache. Tired of being a landlord? Tired of tenants, toilets, and calls at 2 a.m.? Here's the thing. You can't get out of real estate without getting crushed by capital gains. Two ways. First, the 1031 exchange. You sell your property and roll the proceeds into a like kind of property within a specific window. Capital gains deferred, completely legal. The wealthy have used this for decades. But here's the one most people haven't heard of. A DST, Delaware Statutory Trust. You sell your property, do a 1031 exchange into a DST, and you are now a passive investor in institutional real estate. Think apartment complexes, medical buildings, storage facilities, professional management, no tenants, no calls, quarterly income, still deferred taxes. You kept your wealth, you shed the headache. In closing, look, I'm not your financial advisor. I'm not your attorney. But I am the person in your corner, telling you what most people with those titles won't say unless you are paying them by the hour. The wealthy don't just make more money. They play a different game. A game built on legal strategies, smart structures, and products designed to protect everything they built. And now you know those strategies too. If today gave you even one idea that saves you $10,000 this year, share this episode. Someone you love needs to hear it. We are everywhere. Carlos Inspire Show on Apple, Spotify, YouTube, Alexa, Audible, Google, everywhere. It's iHeartRadio. And if you want to go deeper, if you want to sit down and actually map it out what your plan looks like, reach out. The link is in the show notes. Disruptorscode.com. The conversation is free. The strategies are priceless. I am Carlos Cicada, aka Carlos Inspire. Keep building, keep protecting, and remember, the goal isn't just to make money, it's to keep it. See you. in the next episode.